Hello, hello. Good morning. Oh, good afternoon. Welcome to another ES Futures trading stream. Today is Wednesday. It is September 17th. Finally, FOMC is here. Um, I am still firm in my decision to let the market, just let the market do its thing. It is for me, it's a day in which I think is very risky to do anything here. One one of the first things that I noticed when I came to the market earlier today is I checked this profile. Right, I got this overnight profile here. Let me maximize. Let me make this big. Should I notice? Yeah. Let me be. Then I will come back to the histograms for each period here. What I got here is this one here. Now remember, P shapes, V shapes are not what matter, but what matter are or is how the profile is built. This may look like a P shape, but it's not. Right? It's not. This is not short covering. It is just an attempt to. I cannot say it's making an attempt to look like that, but it is not. You have a market that takes this low here. This is amazing. This is an amazing spike. I think this is the European opening. Feels the second period of the European opening here. And what happens after value has some back and forth here, but this is not a P shape, right? Not the volume 150, also not that relevant. From the previous days, from yesterday and the day before yesterday, something that I was noticing is how volume was drying, but in the weird, just like this, for example. You have this is the overnight, that spike. You can see tremendous amount of volume down here, but it doesn't have downside extension. It doesn't have downside extension. It doesn't have continuation here, but the volume is here. This volume is here. Don't have ups downside continuation, and seems like an unfinished auction here. But this is just the but things like this I have been seeing throughout the last couple of days. We got this from yesterday. Here as well in the second period, for example, notice how there is sailing here that comes, and then just boom, disappear. It just like that, right? Same thing can be said from not as evident as in here, but you got the idea here, right? As the day develops, the further it goes into the session, it starts to have this shape and being noticeable here that there is no downside extension here, right? And the market just closes with significant volume around the same area here, right? Let's see if I have one more day here. Oh yeah, I do have here. Okay. This day, this period, for example, look at this one here. There was nothing going on here, nothing I can say here. Just there's no interest in buying this. Something interesting happening here, though. This happens to the upside actually. Okay, this is what is 6680. Okay, this is an unfinished action to the upside here. You can see, I can see here. Now the market closes at the highs. Oh, today did it? Yeah, closes at the high of the day, 6680. And the way how it closes is interesting here. The way how it closes is interesting here. Okay, this, what level is this? 60, 80, right? Where it opens the next day. Yeah, you can see continuation on that. No, the 80 is here actually. Okay, and you got the 80 right there. Okay. All right. Let's put this back where it was. Okay, and yeah, here it is. Here it is. This day here, right? It closes at the high. There's no excess here, but the next day, the market gives excess. It opens, right? It opens with a gap, but the gap is closed and gives an all-time high during the overnight session. All right. This thing here, okay, this thing here, is unconvincing to me. Unconvincing. Then we have liquidation, most likely of the overnight, most likely related to the overnight session here, as we can see here, right? And notice, and I wanna show what happened yesterday. Notice what happened yesterday as the market becomes rotational, how it starts to trade, to move, right? Where it came from, coming from halfback, double lows. The next thing, it was also the same thing, but this was corrected. Then the next one, then the next one. Okay, so at the end of the day, rotation, liquidation here. Liquidation does one thing, remember that. And the particular piece of information that is that I am having from these days is, and this is still before going to the title of the stream, FOMC, and what can be going behind. I actually don't know, right? I don't know that anybody can know that, right? But my main thing for this week, as the week opened, was what the market does relative to these big blocks, big pieces, right? That was something that I had in mind. And as the week develops, I start to see something here. And it is, notice what this market is doing, right? During this day, there's nothing here that shows these blocks. But now, traders can see something here, right? Now they can see these highs here. And notice the following. Okay. In the same way as we had last week, we have these very questionable lows. I mean, not questionable, but how this balance forms, right? And what we have here, tremendous amount of stops probably being placed below here, below this one, or maybe even here, right? I'm going to extend this one. This can be, no, actually not this, but can be very important here. It's not this distribution close, because if there is something here, there can be actually, but because you need something to monitor here, all right? This can be a good area. If the market goes into this distribution here, into this one, it closes, how do you place, if you want to go short or you want to go long, this is a good area to know, right? Somewhere in here, if this market takes this one out, I mean, if I am long, that's an out. Right? The risk is not that much here. Right? How much I have here, for example, 30, 33. The risk can be 1 point, 2 points, 3 points, 3.5 points top here. So it's a good area for to do something in one direction or the other, because but the downside, it is 115, right? The downside, now I'm using imagination. I still haven't talked about FOMC, okay? I'm using imagination here. I got this area, okay? Market comes, checks this one, cannot take this low, right? Or it goes through this, and then market attempts to come back here. And this is also the same way how it was used to buy, the same way can be used to sell from this area. Now, what the market is doing, right? What are the bigger time frames? Monthly, weekly, daily, what's happening, all right? That's the thing. That's why I have this area highlighted. You got 1, 2, 3, 4, 5, 6, 7. Maybe even I can say maybe 8 periods, right? Buying from this area, right? Buying from this area, from this level. If I want to name that level, it's 40, the 66.40, and the stops can be placed down, can be here, and maybe even down here. If there's downside, this distribution can be closed really quick, and this one as well. And the thing is, when we get this is the thing, right? Because this at the time, I label this day as short covering day. The same thing that can happen here, and this is the risk here, right? When we have emotional days, right? I can use this area as a low risk area to place any kind of trade, depending on how the day develops, right? Or I can use this one as well. Anything to the downside will close this distribution here, go to the next one, and start chewing into the single prints, which is significant here, right? This area, right? But it will need to have there's nothing here holding this inventory, right? Still, I haven't talked about FOMC, I haven't talked the rollover period, nothing of that yet. I'm just checking the markets here, right? Now, as the week starts to develop, the same thing that I have seen down here, I am starting to see up here, right? It has something, this area, I highlighted this one, I guess it was yesterday, I think, but the same thing is happening here now. The same thing that I have here, now I am starting to see it up here. Right? Not even, and this can be tricky, right? Not even, this can be like a stage 1, but there's a bigger one up here in this area. Yeah, from this area I have 1, 2, 3 highs, 4 highs, including yesterday, plus these ones from the previous, right? I have excess in the upper side. The same kind of excess that I have down here is what I have up here. But I consider this, I mean, this is, what happened here is, there is no development here, right? If these shorts, are still here, or are going to be removed, this needs, right? And this is part of market dynamics, right? Now the squeeze, the weakest ones will cover here. But the strong ones, the one that holding the market. Remember that we have seen during this day, we have seen some selling going on, right? We have seen some selling, some subtle selling going on. I don't know what. Oh, it was here actually. It was here during this day, not here. My bad. It was here. Remember what? Why we say that this was. There was some subtle selling here, right? But this high removes the weak ones, the weak shorts. Okay, to remove them, the vast majority, if there's anything here, something needs to happen. Is kind of like extension. This guy needs to be squeezed out, right? It didn't happen. The LSM spike in the overnight, but the overnight doesn't have enough volume to be of relevance for any kind of considerations for regular trading hours. Now, as the day is developing, we still have almost one more hour, 45 minutes before FOMC. Remember, the expectation is the Fed is going to cut rates. There is one reaction that market can have, and everybody's counting on that. We have, but check this out, right? Where B is, have you seen that? Right at the opening, was sold right from the opening. Where C or D is, right? This is POC, overnight POC. This period B takes this period. This takes the POC. Buying from POC is very questionable. But the next thing that happens, D sells from C high. Next one, E sells from halfback. Next one, EF sells from E high. So what we had yesterday, when the market was rallying, or it was in the rotation part, in the rotation section to the upside, now we're the same kind of laggard, I would say laggard buying here. The same thing I am seeing here now, this time to the downside. Very, very similar here. All right. I think it's inventory, and this is the tricky part of this. The inventory is getting short at when I've seen the market really high. What's going to happen? I have no idea. And that's what trading is about, right? I got to approach the market. This is my observations about what I'm doing here. And I have to approach the market with detached curiosity here. If I have any bias, I try to acknowledge the bias I have, because I don't want those bias to be in my subconscious, right? I don't want it to be manipulated by those bias. That's why I try to verbalize those, to make the subconscious conscious. All right, now let's zoom in a little bit here. Let's go to the periods of 2 days. Okay. The opening, dries on the upper side, dries going higher here as well. There's some pressure. Notice this. This is interesting here. Yeah. How can I do this? Can I move this? Uh-oh. How do I move this? Maybe this. Look at that. Yeah. Significant amount of volume here. You have perhaps 12,000 here. Kind of like a good amount of trading here. Right? What happens after that? At the downside, what level is this? 57. What do we have at 57? Somebody's making a statement here. Someone is buying 700 contracts at. Somebody wants to be noticed here. Somebody wants to make her presence notice. This is very unusual. This is very rare actually. During this FOMC, previous FOMC, before the release of the news, there is none here. I am not seeing that much, but I am seeing something here. Let's check. The old one. Okay, it will be something like this, right? This is September. There's nothing here. This is the opening. There's nothing here. Just at the opening is 100 contracts here. Nothing. This is how it usually is. So there's something here, right? Something here. I'm going to close. Okay, and from September, remember there is a lot. All of these areas that we were talking just moments ago, and this is what makes days like this very tricky. Because if I see this area, there's not much. It's 600,000 total volume that was dealt with here on Friday, right? But if I check September, this has almost 1 million. Now here comes the things. I've talked about this over and over, right? Come on, man, I may look like a broken disc now, right? Now check this out. Tuesday. This is yesterday. Total volume 2.2. Okay, let's check. 2.2. September has 700,000. September was yesterday, right? 700,000. Look at how much I have here. 100,000, 200,000 plus 60, 260. Let's give it that to 300. 100 to 300. More than half of that is not recorded. More than half of that are dark pools there. What happened in December? 1.5 million. Okay, let's go to December. Yesterday, 800 plus the overnight, 160. Let's do it 200,000. Right? Let's make it 1 million. 500,000, right? 50% of those, the total will be like 35%, but it's still significant amount of volume, right? That is not being registered here, and that's that's why I consider this very risky to do, for me at least, right? This is my humble opinion. This is to do anything here. I will consider some errors that can happen within from my broker, or in this case from Sierra, right? If these are total can be 1.2 millions, Sierra can register 1.19, right? Instead of being 1.2, it can be 1.15 or 1.18, something like that. It's very close, right? That's an error. That can be between, the things that can happen, right, with machines. But 500,000 is just too much. It's just too much, right? And the trade under regular circumstances, right? I think that for me at least, I think that there can be something that may come out of this session, right? One is the expectation is too high, right? There is so many traders, so many people focus on to the upside here in having a directional move out of this meeting. And when everybody is, that's the thing, right? When everybody is so focused on one thing, okay, I start to become nervous, all right? Because when everybody agrees, something big might happen out of that. That's when risk increases. Now, notice how this period has this. It goes higher, but I have a lot of whites here. A lot of whites going lower. I don't like that. Okay. What else? Okay. Now, let's go to FOMC. We have this. We have checked the markets. The market has something here. I am still going to keep these levels here, which is somewhere within. If I want to put a number here, this would be the 75, 6075. What the market does with this, if this is used as a support, resistance, I don't know. I don't know. I want to see what the market does relative to that. There's an all-time high that was made during regular trading hours. The same kind of weakness that I've seen on the upper side, the same kind of it is the same kind of weakness that I see on the lower side. So this can have a huge. We may have some significant swings here, violent whipsaws. I have said this before, which is something that I haven't seen. It has not been happening lately. When we have these swings that the market has, it didn't happen quickly. It didn't happen like really fast high, really fast low. We haven't been seeing that. It is happening really slow, all right? Really slow. Like there is no liquidity, like there is no conviction in any kind of movement here. That I see the couple months, right? That has been a characteristic of September contract. Right? December, it is just starting. I don't know what's going to happen. What can it be? Now, below these arrows here, these are references from September. Notice that distribution close here. What the heck is this, right? This one actually is this up here. If I check September here, this is this reference here and here. But just because I have changed the contracts, the references don't line up anymore. And that's another thing that can have an impact in my trading, in our trading, okay? Because we are dealing with two contracts here. There is no volume here in this area from December. Notice how much volume this has. This has 100,000. If I check this, I have 100,000 or 12,000, 12 or 112. Right? What day is this? This is the 10th. Can I see it here? Yeah, I can see it here. How much I have? 64,000. This one plus the overnight maybe is like 20 or 30,000. It's not that much of a difference, right? Here, but there's no volume. No, it's not enough volume to trigger any kind of sharp short covering or sharp liquidation. It goes away really fast, right? But it's still out here, right? This reference belongs to September. There's a lot of volume here. There's a lot of volume that was here. This one is not valid anymore. Remember what happened. What I'm erasing here are the questionable sellings that we have seen during this day, the 10th, right? And what happened afterwards, right? What happened afterwards, which is what I'm seeing now today. Okay, what I'm seeing today. Another thing that's happening today is check this out. This is really interesting here as well. Man, this, I guess everything I see. Notice how the market opens, huh? Volume, just like yesterday, which actually was kind of like in the upper side, in the higher side of the last 10 days. And then volume starts to decrease. Notice how steep this is becoming. Right? When this happens, while this is happening, by volume starts to decrease as the day progresses, what's happening to price? It starts to go lower, right? So the lower it goes, the less volume it attracts. This is an unfinished action here. This low is an unfinished action. Volume now rise. This might be attracting some kind of buyers buying now because they may consider that this is can be fair prices. I won't consider, I mean, value is overlapping lower, but I won't consider that for relevance because of the event what we have in front of us, right? And the situation here, what most people, what traders do, or the trade that comes out of this, is actually, we have movement of FOMC, upside, downside, whatever it happens. And what happens during Chairman Powell press conference, this is what most traders will be focusing on. What the market does with that. They will pay special attention to what he has to say, or what the market does, right? Or what the market does, and maybe doing one thing, maybe we're doing one thing, or maybe we're doing one thing. And if something changes here, is that because Chairman Powell says something? Right? And based on that, during these 30 minutes, or as long as the press conference continues, that can be, all right, if anything happens here or up here, that can be what triggers a reaction, or the next reaction, which usually is actually the trade, right? But the trade doesn't come until the press conference, or until after the press conference ends. As soon as it ends, boom, we have whatever was building from that specific moment. And that's just part of market dynamics. It happens all the time. It happens all the time. And traders are just so excited. I cannot just hold to place anything. I had to be trading because the market is moving so fast, so high. It's going to be super high, and I am not going to be riding the wave. So I have to be there, right? I have to be there. I am losing here. So that's FOMO. Right? That's FOMO. And FOMO can be very costly. Now, as we speak, notice what's happening here. Another questionable high is being added to this. It was technically, it was still like a couple ticks from halfback, previous period halfback, but now we have this. Now this high is just to the tick here. You have an inside bar. Traders will make, this is a sign, right? This is an inside bar. The inside bar is breaking out to the upside, so I need to pile in. I need to be here, aiming to the upside. Remember, what doesn't happen is also important. I can see here weakness in the upper side, the short side. Being short here can be really, really risky right now. But what happens if what I'm seeing doesn't happen? What I'm thinking, well, it's super risky to be short. But what happens if the short inventory actually have something out of that? But what happens if the first reaction is to the downside? Okay, what do I do now? Okay. I will go short. Will I go short? Will I go long? That has to be part of my plan. I have stated my plan clearly. 1 week, almost 1 week into this week. I mean, before this week even started, I was coming to the decision. I think it was over the weekend. I said, no, I am going to do this, right? Which is, I'm going to sit out this week, no matter what, right? No matter what. Because the market is going to be there. I consider the risk for me is not worth. If I am not able to follow my plan, and why I'm here as well. Huh? I was very tired today, early. I had something to do early in the morning. I was very tired, so what do I do now? Yeah, I'm tired. I just went back to sleep, right? To relax, to be, and even though I don't have any plans, but I want to see what happens. I want to be present here. You can see I have not even put, I even updated my saddle here. Where is saddle actually? 6667.5. 667.5, 667. Oh, look at that. What do we have with 667.5? Do you remember these big blocks here? Was a 67, right? Ha ha. This one here. Yeah. My bad. It was 57. My bad. Forget about it. Yeah. Something that happen all the time as well. I have shown that the market has low volume. Overall, it's very low volume. There is something traders just going short. He's shorting the market just because the market is going lower. I am going to be in the short side. And just before the event, the market just removes all this inventory. It can remove all this inventory. You can remove all of this. Settle maybe up here where this area is, or maybe at the center of this, center of the range, the whole range, right? I wouldn't be surprised at that. Really, it can move quick up here and then come down to the center and settle and wait. Right? And both are valid. Look, notice notice what is coming here after. Remember what we said about this. Oh, come on. Oh, come on, man. What the heck is happening here? Oh, well, how do I move this cash? Move drive. All right. Let's erase it. Let's do ellipse. Just ellipse. Oh. I cannot do this. Something's going on here. I just cannot do it. I just cannot do it. We talk about this, how this higher volume here comes out of nowhere, really, and nothing backing up, right? There's just nothing here.